Okay, on March 31st, we're going to record cash sales of $220,000 plus 4% sales tax. So $220,000 times 0.04 would be $8,800. So we're going to record cash of the $220,000 plus the $8,800, so $228,800. The $220,000 is revenue, and then the $8,800 is sales tax that we will pay to the state of New Jersey, and this is to record cash sales and sales tax. Then the second part is when we actually pay the sales tax, so we debit the liability for $8,800 and we credit cash for $8,800. And this is to record cash payment for sales tax payable. For this next one, we are purchasing equipment, so we're going to debit equipment for $26,000, and we are going to credit note payable for the $26,000. And this is to record the purchase of equipment in exchange for a 1-year note, and that was April. So in December we have to accrue interest, so we're going to debit interest expense and credit interest payable, and it's going to be, if it started in April, it's going to be for 9 out of 12 months. So do 9 divided by 12, which is 0.75, times 0.06 times 26,000, and that would be $1,170. And this is to accrue interest expense. Now, for the next year, we're going to pay the note plus the interest. So the note is for $26,000. The interest we already owed was $1,170, and then the interest that we have not recorded yet would be the other 3 months, January, February, and March of the next year. So 3 divided by 12, which would be 0.25, times 0.06 times 26,000, which would be $390. And then we're going to credit cash for the total interest and the note, which would be $27,560. And then for this next one, we sold a 6-month subscription. So we got cash, and the subscription doesn't start until November. So this is going to be unearned revenue for the $360. Oh, I forgot the sales tax. So $360 times 0.08 would be $28,800, and we're going to round to the nearest dollar. So 29, so $389. Unearned revenue is for $360, and sales tax payable is for $29. Then we pay the sales tax, so we would debit sales tax payable and credit cash for $29. And then we have an adjustment at the end of the year, so we're going to adjust unearned revenue and put it in subscription for the months that have now been earned. We had $360 for a 6-month subscription, so $360 divided by 6 would be $60 a month, and you have November and December, so $120. Okay, for the next one, we made a sale of $28,000. We're going to estimate the warranty expense. It is 4% of 28,000. 28,000 times 0.04. And then this is going to be warranty expense and estimated warranties payable for the 11/20. And then when we actually pay some of the warranty, we're going to credit cash and decrease the liability because we're actually paying on it. Estimated vacation benefits expense is $1,000. And then 3% bonus on net income after deducting the bonus. Net income for the year is $50,000. And if you click on question help and click on help me solve this, you will see the formula. So the bonus percent is 0.03 times the net income before the bonus, which was $50,000. Divided by 1 plus the bonus, so 1.03 would be 1456. 1456, and this is the employee bonus expense, employee bonus payable for 1546. Let me check my calculation. 0.03 times 50,000 divided by 1.03 is 1450. Oh, it should have been 1456. I just put it in wrong. Okay, we'll skip this one and do this one. So we're figuring out gross pay. So first of all, we want to do employee straight time pay for 40 hours. So the straight time pay is 40 hours times 16 per hour, which is $6.40. And then overtime pay for 11 hours, you would do the 16 times 1.5, that's time and a half. 16 times 1.5 times 11, which would be 264, so your gross pay would be 904. Then it wants us to do the net pay, so we will do the gross pay, and then we will calculate the withholdings. Income tax of 20%, so 20% would be, we're going to round to the nearest cent, so $180.80, and then we have a weekly deduction of $12. So, and then we can pull this up here to do, let's go in order. So let's do OASDI, 6.2%, so 0.062 times 904 would be 56,048, so 56.05, and then with Medicare and the rate, you're looking at the employee 0.0145 times 904 would be 13.108 or 13.11. And then we need to get total withholdings. So if you add these up, and when you're doing the percents over here for the employee, 0.062 times the gross pay number, and then the Medicare is 0.0145 times the 904. And then you're going to add these up, and these are the withholdings. So this is the actual take-home pay when you subtract out the withholdings. Then we want to journalize the wages expense accrual. So the wages expense is going to be the actual gross pay, which is 904. And then we're going to credit wages payable for the 642.04 because you have all these things coming out. So we're going to credit income tax payable because we're going to pay that. We took it out of their check, and now we're going to pay that from their check for their income taxes. And then the next thing we had was the United Way payable, which was $12. And then the OASDI taxes payable that we're going to pay is $56.05. And then the Medicare tax payable is going to be $13.11. Okay, and then the payment of the wages, when we actually pay this person, we're going to debit wages payable and credit cash for the net take-home pay, the $642.04. Remember, that's what they're actually going to get paid. The rest of it is getting paid on behalf of them. Okay, so for the first entry, I already calculated it, and what I did was I took the amount of salaries expense, $58,000, and I times it by 0.062 and got $35.96. And then for the second one, I did the 58,000 salaries expense times the 0.0145. Then for the unemployment taxes, it says in the problem only 24,000 is subject to the tax. So take 0.006 times 24,000 to get this one, to get the federal, and then take 0.054 times the 58,000 to get the state. For the next part, the employee benefits expense, and to get this number here, you have to add all of these up. Now, for the employee's benefit expense, you're going to debit employee's benefit expense, and you're going to, so the employee benefits expense is the total of your benefits you're going to pay. So this comes from the paragraph up top. Health insurance payable was $2,500, life insurance payable was $410, and retirement benefits was 8% of $58,000. 58,000 times 0.08 would give you the $46.40, and you add those up to get your benefits expense. The last part, take your payroll tax expense from the first entry, $58.77. Take your employee benefits expense, $75.50, and then take your salaries expense up here, the $58,000, and that would be your total payroll expense. How much you paid in taxes for the business, for your employees, how many benefits you paid, and the actual salaries expense that you paid. And that is it.